Joe, thanks for being with us this morning. Put us into context, the fourth quarter and, of course, this massive guidance you've given for the year ahead. Maybe start with the quarter. What drove it?
Sure. Good morning, Meg. It's a pleasure to be here. And I'd really focus on the year of 2021. So despite the ambiguity, the confusion, some recovery and then partial recoveries and then non-recoveries, I think the year was a very solid one that was really turned in by Johnson Johnson. If you look overall for the company, we had 13% growth on the top line. We leaned into expectations this time last year for the year, and we surpassed those. If you look at our pharmaceutical unit, 10th consecutive year with above market growth, and the pipeline is stocked. Medical devices saw improved performance versus 2019, as well as 2020, obviously. And then consumer continued to grow competitively despite some supply constraints throughout the system. If you look specifically at the fourth quarter, though, you're right. There was a couple headwinds in there that make it a little bit cloudy. The first would be just the strengthening dollar. So that impacted our top line reported sales by probably $150 to $200 million. So that is a significant disconnect from some of the models that are out there. But we also did see Omicron, as you mentioned, as well as hospital staffing shortages, creating some uncertainty in the medical device segment, specifically with elective procedures. If you look at our business, which we think is a pretty good proxy, in the month of October, growth versus 2019's October was about 10%. In November, that declined to 5%, and it was minus 1% in December. So you saw that decelerating trend, non-recovery, if you will. In consumer, we had some supply constraints did hit us with raw materials, labor shortages with respect to really third-party manufacturers, as well as higher transportation costs that are starting to come through in the P&L. But we think those are short-lived. We think the second half of 2022 will be stronger than the first half as some of these dynamics continue into the early part of this year. But we feel very good about where we sit for 2022. And that's underpinned by investment in R&D, close to $15 billion in 2021, breaking the record-setting year we had in 2020. So we're very well positioned, getting very close to hopefully net cash, the lowest level of net debt that we've had in years. So we think we can lean in on some of our other capital allocation priorities as well.
Well, I want to ask you about those, but let's talk about what you're kind of mapping out for the year to come. The entire industry looks to J&J as a benchmark, especially for what's happening with hospitals. How are you looking at the impact of Omicron early in the year and when you kind of start to see that potentially easing up?
Yeah, so that negative 1% I mentioned in December versus 2019, which is a much more normal year for comparative purposes, we think that'll linger into January. But then as we're all seeing now, case counts are going down. It really has become much more a discussion with hospital administrators. And you've heard this from some of our competitors around the hospital staffing shortages. We've had discussions with significant leaders from large hospital systems and nurses who have done an outstanding job and have really given a lot of sweat over the last 20 months. They are now covering 10 people when it used to be 5 during a shift. So those are things that really need to be addressed if we're going to come out of this in a much more robust way. But we do expect improved recovery as the year progresses.